The entry for 3rd July Thursday, the weekly expiry. So the day wasn't as good as I would have wanted it to be because I ended up taking three FOMO trades. I've made a couple of updates to the SOP so that I don't repeat, the similar kind of amateur behavior in the future. But nevertheless, I'll just walk you through briefly to the trades. So the first trade was based on 75-minute candle, this one. So it got briefly breached. But the problem was I hadn't marked this liquidity zone because, like I already mentioned in the previous videos, I was not well and wasn't trading. And ideally, I wasn't supposed to trade today either, but I saw the opportunity and I couldn't resist and I just jumped in, which is partly why I have made the amendments that I've told you about so that I don't stand a chance to repeat this in the future. So, yeah, the first trade was, I entered it when this level, that is the high of it, 567, got breached. It got breached briefly. It had support of option premium per se, but if you look at the option price action for the day, it was clearly showing a sideways too. So it got breached for briefly and it went up by just 10 points. And if I had marked this liquidity zone, it would have been very clear and I would have, in all probability, avoided entry. But yeah, that didn't happen. So I kept on waiting. When I saw another hammer being formed in the 5-minute chart, I added quantity and call it my luck or volatility or whatever. It did shoot up briefly and I was able to exit with some profit. And then when the second trade was when this level of 480, which was proving to be a strong intraday support because we can see 1, 2, 3, 4 times it gave support, and 3 out of 4 of these times it formed a strong, hammer candle, which was indicative of its strength. And considering it was an expiry day, I jumped in, although a little late because I actually entered in this candle instead of entering. Because I was a little scared that what happened here might happen here again. So I waited for this candle. I mean this yesterday's low to be breached. And yeah, this also gave me a little bit of profits. Although if I would have stayed a little longer, I could have made a little more. But I was a little scared of what happened here and of the volatile price action today. And in fact, today's price action was completely foreign to me. And when I, reflected upon it later, I realized it's because usually I avoid days like this. And I would have avoided it had I, marked the liquidity zones and did my homework. The third trade was a pure FOMO trade when market was moving up here, and I ended up taking a loss. So the profits in the first two trades were around like cumulatively made 4.5k, and I lost around 3.4k in this trade because I was a little greedy and took an extra quantity. And yeah, so all in all, I ended up making around 1%, but yeah, it can't be counted because all three of them were FOMO trades. So the system updates that I was talking to you about was a couple of them. The first one being not to take a trade unless the mindset points. This will be clear once I make that video of SOP that I've been telling you about. I think it's about time too. I'll do that shortly. But so I have a couple of points that I need to, you know, so I have this point system where 60% of those points come from minds, I mean, non-market elements like, following a routine, not waking up in time, I mean, waking up in time, all those things. And 40% of those points come from actual market structure and, my entry rules per se. So, yeah, so that's the idea. So I've made the 60% of these points as non-negotiable. That is to say, if I don't score 6 out of 6 in this, segment, I don't get the right to trade that day. And if I do take a trade ignoring that rule, then I cannot trade for the next two trading sessions, just like how I cannot trade for the next two trading sessions if I, overshoot the per trade or per day risk of, 4% and 6% of my capital, respectively. Another thing that I've incorporated is what I have, uh, what I've called over the years as option exhaustion. What it basically means is, say, if market is going up and the option price is not reflecting the enthusiasm and it is sort of getting shy towards the end, like over here it'll just make a spike and then start coming down much before the index starts to come down. And when it in the lower end, the same thing happens with put option. So that is like a strong indicator of sideways or range bound or volatile market. And the same was the case yesterday, but I just continued to ignore it. So now I have sort of explicitly mentioned it in my execution checklist. And I've also decided that I will go through the execution checklist, those 40% of the rules, like 4 pointers. Basically, it'll take me hardly 5 seconds to go through them mentally before entering a trade. And in my discussion with ChatGPT, it actually, came up with a really good one-liner, which I thought I'll share with you all. I think I should probably read it out and not, Yeah, this was it. Trading under compromised mindset is like driving a Ferrari half drunk because the road seems empty. Just because it worked out doesn't mean it should count. So it was basically talking about the FOMO trades because, the real risk of FOMO trades isn't actually the money, but, the emotional capital or the mindset that it costs you. So, yeah, that is about it. See you tomorrow.